Hey, today I want to talk to you about accounting and tax treatment of tip income and how you can avoid a $30,000 or more mistake I've seen many med spa owners make. So unbeknownst to many med spa owners, they can and are held liable for underreported tip income. And a lot of times they think that they're doing their team a favor by not reporting tips. But the IRS has taken the position that all employers, whether it's in a restaurant or a beauty salon, need to put processes in place to accurately capture and report tip income on W-2 employees' wages. And when you don't do that, the IRS can hold you personally liable for both the employee and the employer's portion of payroll taxes, which is the FICA and Social Security taxes. So that's 7.5% for the employee, 7.5% for the employer, call it about 15%. So let's say you have a med spa that hasn't been reporting tip income before, haven't been putting procedures in place to capture that and put it on your employee's W-2. And let's just say they gather $10,000 in tip income. Now, I understand that medical procedures are not often are not allowed to be tipped, but a lot of people offer full services salons, so they're doing more skincare treatments that are historically higher tip type services. So $10,000 in a year is really not an exaggeration. It's pretty easy to hit that number. Or if you just extrapolate that out, if you're $1 million salon and let's say you have, $50,000 in tips, 15% of 50,000 is a $75,000 or $7,500 payroll taxes that you're going to end up owing on unreported tips. Okay, so then how do you get up to 30,000? Well, when the IRS comes in and they find an error like this, they go back 2 more years. They don't just do 1 year. And they're going to hold you accountable for tip income for 3 years. So 3 years times, 7,500 puts you at about 22,500. Interest and penalties, you're at $30,000. And that's not, an exaggeration from a calculation viewpoint. Tip income is serious business. It's a serious liability you need to figure out how to handle if you're not doing it already. So I want to give you a couple tips on maybe how to do that. First of all, let's talk about the 2 categories of tips. They're received on credit card and cash. My 2 suggestions for credit cards is either to not accept credit card tips, because, quite honestly, they're going to be included on the credit card processor's end of the year. And if you're not taking the deduction, you're actually paying income on, services or tip income that you never received. So either don't accept or allow your staff to take tips on credit cards, or if you do, don't let them take cash out of your register, because that's going to throw your reconciliations off at the end of the day. And it's going to mandate that the reporting goes onto the W-2. It's not something that they can just take the money out, kind of slip things out the back door. So, if you're going to do cash tips, the IRS have forms in place that you can use that basically require staff to report to you the amount of cash tips they receive. And once you do that, your responsibility is to audit them. So if you have someone reporting, $200 a week and someone reporting $50 a week, you need to sit down with the person reporting $50 and say, hey, is this really what you're receiving? Everyone else is a lot higher than you. Maybe we need to talk about whether your service level for clients, are they really that dissatisfied for your service, or what are you doing differently that you're not receiving these tips? Cash tips, put the paperwork in place. Credit card tips, pay them out through payroll or through W-2 their W-2. And the last thing I want to talk about is, an organization called the PBA, which is the Professional Beauticians Association. I'm bringing them up because every other employer, well, particularly restaurants, are given a tax credit for having to deal with this nightmare with their staff, right? And it's kind of a nightmare because historically, tip income is something that just kind of slid under the rug. So what the Congress did to kind of incentivize business owners to get serious about this is to allow them to take a credit for the tip income that's reported on on their tax return the payroll taxes that they're actually paying in. So there could be a substantial deduction. And what PBA is saying, hey, is listen, why do restaurants only get this credit? Why don't other tipping industries such as med spas or spa owners that are tip-intensive businesses that have staff that rely on those tips, why don't they also, or why don't we qualify for those, that tax break? So they're circulating some legislation. I think it's HR 45 and S 45 to modify the tax code to allow you guys to take a deduction for dealing with this nightmare. I'm going to put a link below where you can sign that petition. They also have some sample letters you can send to your representatives. I'm not a political type person, but I think it's applicable to making our industry stand on equal standings as other tip-intensive industries. So hopefully you found this helpful. Certainly write or call if you have questions. What I also say is that a lot of people just do their W-2s through QuickBooks, and they have no idea of all the intricacies of things that are supposed to go on the W-2 that aren't showing up. It's important for your CPA or your tax professional or whoever you're working with to review these things, because it's something that can slide under the rug, because QuickBooks isn't going to tell you. They're just providing, you fill out the form, they submit it, and there's other things that need to go on that W-2 and be reported to the IRS that can come back and haunt you. So, if they're not looking at your payroll, you need to make sure that's happening. Okay. Hopefully that's helpful. Talk to you later.